A growing number of Wall Street strategists are lowering their S&P forecasts for the year, but what hasn't been a feature in many of these calls is a more bearish outlook for the Magnificent Seven and big tech more broadly. So let's get to the outlook for the tech trade. Joining us now, Tony Wang, Rowe Price's Science Technology Equity Strategy Portfolio Manager. Tony, great to have you here. So talk to me about where you are seeing the tech trade going. I mean, NVIDIA in particular really getting hit this morning, down a little over 5% at the moment. Where do you see that basket of 7 stocks going to end the year?
Yeah, well, I think that going into the year, we saw kind of this idea that they were spending a lot of capex, and the numbers were coming more in line, and so kind of the Mag 7 and Lag 7. And here, I think valuations are more attractive. I think a lot of it is kind of the recognition that tech is still cyclical, and we have cyclical headwinds potentially developing. And so, I mean, going forward, I think earnings really do matter. I think the ROI on AI is particularly important, and just showing that that there are strong use cases, and this capex is going to return really well for investors, I think is going to be top of mind.
Tony, I've just been asking multiple people over the course of this week, trying to wrap my head around what makes this technological cycle different versus ones that we've seen in the past where companies' valuations skyrocketed, and then it took them 5, 8, maybe sometimes 12 years to grow into those valuations over time. What makes this AI disruption type different?
Yeah, I think you kind of have to go stock by stock. When you look at the Mag 7, a lot of them are pretty reasonably priced, and I think this cycle has been largely driven by earnings and less multiple. I think in the 2000 dot-com bubble, there were a lot of kind of no revenue businesses, and they were essentially burning a lot of cash. I think this cycle, when you look at AI and how it's funded, it's largely funded by the free cash flow of like a Meta or Tesla. When they're building out AI. And so I think it kind of depends. I mean, obviously Tesla is a little bit more of a kind of AI story, I think, and less of a car company. And so, I think this one, when I take a step back, it does feel more sustainable, but it doesn't mean it's not still cyclical.
And the reason I ask that is it just seems similar to some of the powerhouses that you had that were envisioning and then rolling out the cloud. And so the move to the cloud as well, those companies were well capitalized, but they still had to have a period where they were able to show to investors that they could continue to not just bring in net new customers, but sustain their existing portfolio client base, then build on top of that with everyone else who was going to buy into the cloud and into a different data center that they didn't have to keep on premise.
Yeah, I think that's how a lot of the hyperscale players are viewing the AI infrastructure opportunity, that this is as big, if not bigger, than the cloud opportunity that they had a number of years ago. And so you have to go through that kind of investment period and just the view that the opportunity is just so large, and it is a once in a lifetime kind of shot that they have to take. And so that's kind of fueled this cycle where I don't think we've seen anyone really blink. I think you see some reports that Microsoft is stepping back, but others are stepping in to take that capacity on power.
I also want to get your take on CoreWeave. We have some reporting this morning that NVIDIA is potentially going to be involved in the CoreWeave IPO, anchoring the CoreWeave deal at $40 a share and a $250 million order that could increase. This is according to reporting over at CNBC. What does that tell you both about the path forward for NVIDIA and CoreWeave's IPO, again, cutting their IPO size here, even amid this announcement of backing from NVIDIA?
Yeah, well, I think that the neo clouds emerging over the last few years has been really exciting to watch. They essentially go, kind of closer to the, bare metal and have a more optimized software stack. So I think that in a way, this is the right way to build AI infrastructure from a clean sheet perspective. And so, I think that the market is watching how sustainable is this kind of the model. And then, I think CoreWeave's done a really nice job of being able to finance this and drop costs for their customers and be able to structure this so that it is more attractive for people that are looking to train models and deploy models. So, to me, I think that it is an indication of demand in this new kind of financing structure that CoreWeave's developing. And I think, NVIDIA, CoreWeave's an important ecosystem partner for them because they do kind of stand things up really quickly and efficiently.
Final minute, Tony. I think where we've kind of ranged in our conversation points to the fact that there are a lot of different opportunities in tech right now amid all the uncertainty. You've got private market names going public. You've got the China tech trade, the big tech names in the US. They're maybe on sale right now. Where should investors who love the idea of being invested in tech be allocating capital right now?
Yeah, I think you kind of want to have a balanced portfolio. Apple is probably one where it is kind of this kind of safe haven. If things sell off, it's kind of has a nice kind of ballast to it. And, they are going to have an iPhone cycle coming up that could be a big upgrade cycle with a new form factor. So I think there's like kind of defensive, ballasty names like that. But then there's also, I think, areas of cybersecurity. There's continues to be a really nice tailwind there with AI probably both increasing the attack surface as well as causing the space to grow more. And so I think that one it's less related tariffs as well, and so you kind of have a little bit more insulation there amid like kind of secular tailwinds.
Tony, thanks so much for taking the time here with us just after the market opened this morning.
Thank you.